And welcome to ETF Edge, your go-to place for everything exchange-traded funds. I'm your host, Bob Pisani. Weight loss drugs are among the hottest investments on Wall Street, and of course, the ETF industry is pouncing with not one, but two weight loss ETFs coming this week. Let's talk with the guy running one of them, Dave Matzes from Roundhill. He's unveiling his new GLP weight loss ETF tomorrow. Also joining us, my old friend Todd Rosenbluth from Verify. Dave, Goldman Sachs research, I look at some of this research, it's amazing. Obesity treatment market could expand by more than 16 times its current size. It could be a $100 billion business by 2030. A lot of companies are obviously scrambling to get into this business. So what's in this ETF, and you've made it actively managed? Yeah. No index, and why did you make that decision?
That's correct. Well, I mean, look, the obesity challenge is an epidemic, right? And if we include people that are overweight, nearly 74% of Americans are either obese or overweight. And so the opportunity to address that is huge. And there's a game changer, and that game changer is GLP-1 drugs. And we are at Roundhill with the launch of OZEM focused on identifying the companies at the forefront of that. And the two big ones right now, and the market certainly has sniffed those out, is Lilly and Novo with drugs in market, but there are others coming. And so the ability to have active management to overweight the companies that are actually in market producing the drugs, and then go down the line to identify those that are in particular phases is powerful.
And we're looking at what you're going to, again, these are launching tomorrow, so this is not even available yet, but Novo Nordisk and Lilly, the two winners, are 40% of the fund here, and we see some other ones there, Zealand, Innovent, and Chugai. I don't know Chugai, that's a Chinese firm, is
yes.
that right? Yeah. Taking up the rear here. The thing that I'm wondering about is Novo Nordisk is up 300% in the last 2 years. That ship is already sailed. Lilly's up almost 300% too. So that's almost 40% of the ETF here. Essentially, your bet here is that there are other companies that are going to come in and also sort of move the same way they did. Is that the idea?
Yeah, no, you're absolutely right. And so, yeah, certainly those stocks are up considerably over the last year, but we're still in the early days. It's a little bit like thinking about NVIDIA with AI. They just have a head start. These companies pivoted to focus on diabetes and weight loss drugs a few years ago, were able to get in market and produce results that are remarkable. 15% weight loss on average over 4 to 6 months. There's actually a drug that Amgen's working on with 25% weight loss potential. So these are, again, real game changers, and they're going mainstream. And the marketplace has plenty of room for growth with other companies coming in, whether that with more powerful drugs or with things that actually you don't need to have an injectable.
Todd, I should also note that the Amplify is also launching a weight loss ETF this week. But you know what's remarkable to me? I wonder what your thoughts are. It seems like the ETF business has been a bit slow launching products in the weight loss space. You know, we had as I mentioned, Amplify before, but these have been out 2 years, or essentially we've had ideas about this already. And yet, these are the first two really large ones that are out there in the weight loss space. You have any thoughts on that? Usually the ETF business bounces pretty quick.
There currently is one ETF that's been trading. It's been trading for a number of months. It's from TEMA. The ticker is HRTS, and it's gathered already $60 million. But you're right, this is a long-term trend, and the ETF industry does a great job, usually, of spotting that trend. And then we see 2, 3, 4, probably 6 or 7 products that we'll see in the next year or so that are focused on this trend. But what's interesting is we're going to see different ways of tackling it. So Dave's fund, the Roundhill fund that's coming out tomorrow, is going to be concentrated in a couple of stocks as we showed on the screen, but with a few other ones, and is actively managed. The HRTS, the TEMA ETF, is actively managed. It has over 40 stocks, both US and non-US, and folks can look inside the portfolio. And the Amplify one is actually going to be tracking an index from my firm Verify. I'm not connected directly to it, but indirectly. And it's going to be an index-based approach focusing on the drug companies as well as the enablers within the healthcare space. So 3 different ways to tackle that same obesity challenge.
Yeah, this is a little bit to me sort of like what happened with pot ETFs and to a certain extent with crypto, in that there was an awful lot of interest, but there wasn't an awful lot necessarily to buy. Or is it a little different? The business is there. We can identify it. We know 2 big winners already. We're just not sure what, if any, winners there are going to be out there, right?
Right. It's still early stages. And so the drug pipeline is still progressing. There's a number of companies that are in earlier stages of development. And then, as I mentioned, there are enablers. And so you can benefit from that with, at least from the Amplify one, of having enablers in the portfolio. And I'm confident Roundhill has that exposure and opportunity, as does the Tema one with active management. But yes, we are early stages. We'll find out who those winners are going to be in 3 to 5 years. And why people want to invest in thematic ETFs is if they have patience, they'll put a small slice of their broader portfolio into something like artificial intelligence or cannabis or cybersecurity or robotics and hope that they get the benefits of diversification by having a handful of winners, not just one winner or potential loser.
Dave, I don't know if you noticed, but a company, Him and Hers Drugs, today, HIMS is the symbol, if you can put that up, was up today. That they announced a new compound GLP weight loss injection.
Yeah, no,
compound, which means what?
Well, super exciting. So basically, GLP-1 drugs are actually very hard to access, and they're incredibly expensive. And Hims is a company, basically offering kind of virtual healthcare, but getting into the drug space. Compounding pharmacy is where they kind of mix and match different chemicals to kind of create something similar to what you would get with an Ozempic or the like. And this is to I think some of our points. We are in early days. There's the winners and losers are going to be determined. Certainly, we know who has drugs in market now. We know who's coming. But a company like Hims entering this space shows that there's a lot more to come.
Yeah, this is a very good example where all of a sudden, I know what you call biosimilars, or what would you call them, where you're mixing matching drugs,
exactly.
Essentially.
Correct.
And all of a sudden, look, the stock's up 30%. And this is not a stock we cover that much. It doesn't show up on our weekly list that often, but look at it up 30% today. I want to move on and ask you about something else you're going to be launching soon. You had a big hit last year with the Magnificent 7 ETF. You all remember this, folks? We had them on a while ago last year. MAGS, M-A-G-S. It's the concentrated Magnificent 7 stocks. It was a big hit last year. It's at a new high today.
That's right.
And now you're going to do another one. You announced that you filed for essentially the same thing in China. This is going to be called the Roundhill Lucky 8 ETFs. Obviously a Chinese reference here, but it's got Tencent in it, Alibaba, Meituan, BYD, Xiaomi, PDD, JD.com, and Baidu. So it's 8 China companies, right? And here you see the list. Why is this why a concentrated bet on China? You hit gold with the MAGS thing, but why China now? I'm curious about this decision.
Yeah, look, there's a lot of question marks about the Chinese economy and the potential for growth of the consumer in China. But at the end of the day, we believe that investors are looking for exposures that give them precision, just like we found with MAGS. I remember when we launched MAGS, people were questioning, is the Magnificent 7 trade legit? Is it over? Does it make any sense? Obviously, we're hitting all-time highs a little over a year later, so certainly it's paid off. NVIDIA is reporting this week as well. We'll see where that leads. But when it comes to China, when we were hearing feedback from investors, hey, where can we take this concept of creating concentrated precision and bring it? People give you all sort of wonky ideas, but when we went back to our laboratory, realized China is that opportunity, particularly if they're coming out of an economic slowdown. That could be an opportunity for investors to step into China and do so in just really the names that matter. There's a lot of ETFs out there, and diversification is great. I firmly believe in broad-based diversification for big parts of a portfolio, but if you just want those names, it's hard to get with some traditional Chinese ETFs, and this is going to do that.
Yeah, well, it's hard to get. They don't have the concentration. There's a lot of Chinese ETFs, but you don't have the concentration there. You hit gold with the MAGS one. The timing was perfect, and now it's back again. I mean, they had underperformed for a number of months, and in the last few weeks, Magnificent 7 stocks have done a great job. And Todd, this is the kind of odd thing about these, I call them Cathy Wood bets, where you're getting concentrated bets in very, very small areas of the market, and sometimes everything just goes against you, and sometimes it just kind of works. China stocks have been making a comeback recently against all odds, even though the economy is still feeling the effects, the after effects of the whole COVID epidemic. But this speaks to the whole strength of this business, of this ETF business, that you can launch these things and make an argument about why they might work.
Yeah, very much so. And you're right. We've seen demand for Chinese-focused ETFs pick up. The Crane Shares KWEB ETF, which is focused on the internet companies within China, which are fast-growing companies. We've seen growing interest on our Verify platform for the KWEB ETF, the broader-based China ETFs, whether it's China A shares related from DWS, the X-Trackers firm, the Asher ETF, ASHR. We've seen renewed interest in that. And even the more broadly diversified emerging markets ETFs that have China within their overall exposure. We are seeing renewed interest. And so I'm excited to see this product from Round Hill come to market. They're very innovative.
On a similar note, you also, generative AI, of course, big topic still. You were very early in with a generative AI ETF, Chat, C-H-A-T, if we could put that up. And you had right mix it. You had NVIDIA, Microsoft, Alphabet, your top holdings. Kind of looks like the Magnificent Seven in a way.
A little bit.
But that's been doing very well. We're just shy of a new high on that one. And there's the largest holdings. Again, right moves there on NVIDIA and Microsoft and Alphabet with the holdings there. I can't help but be amazed. You know, people ask me about ChatGPT and do I use ChatGPT and what do I think of, and my thoughts are that it's an interesting product. From a journalist's point of view, it can be useful, but it's also staggeringly stupid and can make amazingly dumb comments and mistakes. You have to be very careful as a journalist using it. But I can see the next few years what's coming. And so for me, it is quite remarkable that we may be less than 5 years away from non-biological intelligence coming. I mean, this thing is going to get better every single second. And eventually there's going to be a real breakthrough where it's not just going to be scraping and making up stuff and assembling pieces. It's going to be doing independent thinking. You can just see it coming. It's getting better and better. In the year I've been using it, it's getting better. Any thoughts on where we're going on this? I'm asking you to be a big thinker and not an ETF manager, but...
Yeah, well, I mean, and that's one of the reasons why we launched the Chat ETF to begin with. And even last week's announcement from OpenAI, and I'm not sure if you had the opportunity to use those enhancements, they're remarkable. The ability not just to use it as, when we think of chatbot or the asking it a question or typing something in, taking video, taking picture, transforming it, transcribing it, it's all happening. And then not just showing what it says, or what it looks like in a picture, giving insights from that. Now, yep, time will tell, right? It's got to get a little bit smarter there. But the more people that use it, the more data that goes into it, the smarter it will get. And yeah, I think bigger picture, at least in the time, I have 3 little girls at home. I can only imagine what they're going to be using when they're in high school or frankly when they're working. And I think a lot of it's going to be how do you interact with the science and with the artificial intelligence.
Yeah, well, Todd, this is what I tell people all the time. People who look at this are very fond of saying, look how stupid this thing is. It gave this made-up answer where it used outdated information and it hallucinated, and these things are dumb and they're never going to surpass human intelligence. And when I point out every single moment, every second, this is getting better, every moment. And you could see the change in just the last year. You don't need to hallucinate yourself, humans hallucinate too, to understand that this thing is eventually going to show some level of human level intelligence. And it's not that far off. I don't know how you feel about it, Todd, but I tell people to stop smirking and start seeing use a little imagination to see where this is going to be in the next 5 years.
Yeah, this thematic trend has tremendous potential. And this is a great example of there are some ETF providers that launched products 2, 3, 4 years ago in anticipation that the trend would pick up. And we've seen strong demand for these ETFs. So the Robo Global Artificial Intelligence ETF, the ticker is THNQ, is one of those examples of ETFs. But we've seen iShares with IRBO, with robotics and artificial intelligence, and Global X's BOTZ. We've seen these products continue to gain traction, taking a broadly diversified approach to investing in artificial intelligence. And we think the trend is still very bright. We were talking about weight loss earlier. This is 3 or 4 years further ahead in terms of the ETF product development and the trends within the industry. And we think the future remains very bright for artificial intelligence ETFs.
Yeah. Todd, I want to switch gears a little bit and ask you about an upcoming event that might affect ETFs. So on May 28th, next week, the SEC will require trades to settle 1 day after a trade is made. And those who don't know this, folks, this is called T+1. And this is a change from the current T+2 settlement date. So if you buy a stock, it settles 2 days later. Right now, it's going to go to settlement 1 day. Todd, what, if any, effect is this going to have on ETF settlement and prices next week? Is it going to pass with no problems? Are there issues? Just give us the 30-second viewpoint on this.
Yeah, so I think the first couple of days, we're going to see some of the kinks get worked out, hopefully, within the system. But the biggest issue to me is U.S. investors buying internationally focused ETFs. So those that own stocks in Europe or certainly in Asia, where the market closes, obviously, before the ETF closes on the New York Stock Exchange and NASDAQ or CBOE. And so there's going to be wider spreads for ETFs tied to emerging markets like EEM or developed international markets like VEA from Vanguard. But I think in the coming days, weeks, we'll see this work its way out of the system.
So the U.S. is going to go into a long weekend. Canada and Mexico are also going to go to T+1, I understand, next week, right? That's
right.
my understanding.
That's right.
Yeah.
That's right. So I probably would not be buying or eagerly buying ETFs at the open that are focused on international securities the Tuesday after Labor Day, or even the Monday or Tuesday after this gets implemented, without expectations that the spreads could be wide. And so you certainly have to be aware of that, certainly buying at the open.
And the Russell reconstitution, those who don't know, folks, this is a little wonky, but this happens in every June. Russell 2,000, 1,000 rebalances, but they announced the first wave that next, I think, on Friday, right? So I'm just trying to figure out how all this kind of mixes in with the play here to cause any complications. Your point, Todd, is you think U.S.-based ETFs are going to be fine, but some of the international ones. The question is they have different settlement dates, right? Potentially, some of these stocks.
Correct.
That could cause, but this will be a temporary problem, right?
I think so. I think the ETF ecosystem has proven itself time and again to, as more volume happens, these spreads tighten. We'll see these kinks worked out of the system soon.
Okay. All right. Just wanted to get that. Folks, it's been great discussion here. Again, AI, weight loss drugs, the two hottest topics in the ETF business is all over that. So that does it for this week's ETF Edge. My thanks to Dave and Todd. We've asked Todd, by the way, to stick around and give us his thoughts on some other ETF developments I want to hit on for the ETF Edge podcast. That's coming right up. And remember, you can see all of our shows on our website. That's etfedge.cnbc.com. Everybody have a healthy, happy, and safe trading week.
Get the ABCs of ETFs with the ETF Edge newsletter. Your weekly update on the hottest trends, expert analysis, actionable ideas, and exclusive insight from host Bob Pisani. Sign up now at cnbc.com/ETF Edge newsletter.